Good morning, it's Jeffrey Cohen. How are you today? It's August 10th, Wednesday, 7 a.m. Chicago, 8 a.m. East Coast time. Markets open about an hour and a half. About an hour and a half. We're going to talk about, first off, we're going to talk about two trades. And we'll talk about the markets. We'll talk about equities. We'll talk about fixed income. We're also going to talk a little bit about DWave. And I'm very excited. We went back to our DWave roots, which is always good. We're going to pull up our pre-market action. We're going to pull up Book Viewer. We like that. That's going to show us where the SPY, the S&P 500 is. It's up this morning a little bit. We're wearing a green shirt. We actually think the market might be higher today. We do not believe that this bear market rally is over. We think it still has some legs. At least we're counting on it. And we put our money where our mouth is. And so got Verizon up. And we're going to put up DWave stock. Qubits. We're going to show you some stuff. It's going to be great. We ran on the DWave quantum computer a lot yesterday, and we plan on running more today. And so I'm going to share a little bit of that research inside baseball. So we do have a quantum algorithm. We do have a quantum model. It works. It's great. We love it. And it's what DWave talks about. So we use LEAP. So the DWave quantum computers, they aren't in our office here. They're actually at DWave, and we connect through them through a web connection. And there are many DWave computers. In fact, you can see them all. In Europe, you run the Advantage 5.2. We run on the Advantage 6.1, but the 4.1's fine too. You got a prototype, you got some hybrid different models. And then the DWave 2000, we love that old box. It's actually one of my favorites. And I'm glad they don't take it down. It's only got around 2,048 qubits versus the new ones that have like 5,000. But man, we used to be able to make that thing sing. It's kind of like an old car. It takes a little more work to get things out of it. And to show you what comes out of a DWave run, this is the last one. So we ran 1, 2, 3, 4, 5, 6, 7, 8, 9 jobs. And so what happens is it takes our problem and it embeds it in a series of ones, negative ones, and zeros. And so the good news is, right, 0 means nothing. It means empty, right? These are all qubits. I should probably focus in for you. Let's see if I can focus in. I just want to show this to you. I don't know that you've ever seen the output of a quantum run before. Maybe you have, maybe you haven't. But now's your chance, right? So see all those things over there? Those little, like... Yeah, I know you want to zoom in some more. All right. See the little holes right there? There you go. It's beautiful. I didn't want to reset the zoom. I hate when it does that. Come on now. Zoom in. Here we go. The little holes. These little holes can either be... Those are qubits. Those are actually spinning things that are either up or down, in or out, high or low, 1 or negative 1. We demonstrate them mathematically in an icing model, which is 1 and negative 1. So think of it as up is +1, down is negative 1. 0 just means it's empty. And so you'll notice that in this particular view that we're looking at, you've got some ones and some not ones. So what happens is the ones are the actual stocks that were picked. And the not ones are the stocks that are not picked, and there's a lot more stocks. And you see connections between stocks. So what happens is, and this is why we like the DWave, why it's cool. So this one stock, I couldn't tell you which one it is. It's number, it's Qubit 3529. It's connected to a whole bunch of stocks. 1, 2, 3. And what it's saying is, don't hold all those. Hold some other ones. I love that, right? Because it gives you a little bit of an intuition. Or there's not a lot of stocks that are loved, and then there's ones that are just empty. So we were able to take our problem. In this case, it's the last one. Hang on. Run 8. I have to get my notebook. Hang on. I just want to give you a feeling for it. I think it's important. Yeah. 80 stocks. We're able to put 80 stocks on this. And so if you take a look, I'm going to zoom back out. 80 stocks does not use a lot of room on the DWave. See all that? That's all that room. All we did was we placed our model this way. And so each stock is represented, and each stock is connected to stocks that the model thinks it should be connected to. And so that would mean that the embedding model has to make some choices. And so, because 80 connected to 80 is a pretty big number. And so, for stocks that don't really react to each other, it may not connect them. This is why a DWave will give a different answer than a regular classical model. So it's already made some decisions on embedding. And the way we do the embedding is that we run our answer. I know, I'm sorry, this is complicated, but we run our answer for different portfolio sizes. What's the best 25 stock portfolio? What's the best 24 stock portfolio? 23 stock portfolio? And we recalibrate the variances and expected returns. Let's say it's 20 stocks, that's 5% of stock. If it's 10 stocks, it's 10% of stock. If it's 40 stocks, it's 2.5% of stock. And it has to redo all the math, right? And so this is a particular embedding of the problem. And then we reuse the embedding because it's, first off, it's way faster. We figure you get a good embedding, you're fine. Wrap it up, right? And so this embedding then is used 25, 24, 23, 22, 21, 20 stocks. Now we get chain length warnings because some of these are a little long. And we used to have chain lengths that were like 30. Okay, so 7's not a big deal. So what happens is there's a risk that over time, over the time that we're running the problem, which in this case was 40 milliseconds, microseconds, 40 microseconds. We ran 200 iterations, each one 40 microseconds. And the question is, can we hold? So you do the embedding, and can the qubits hold their coherence? That's why it's warning you. 7 links, if each one has, let's say, and this is not an unrealistic number, if each one has a 2 to 3% chance of decohering in 40 microseconds, 3% times 7 is, that's probably close to 20% chance of that chain being broken, of that stock analysis being incomplete. And if that's the case, it'll drop the answer. Okay. So we like short chain lengths, right? If we go to the earlier problem set, you can see this one probably only has 48 stocks. God, it has so much room to play. We're using just a portion of the qubits. No warnings. Still gave us a very good answer. Still gave us a nice negative energy. And so when we do this with the DWave, right? So the challenge is with 48 stocks and the connections between the important stocks. This is an answer, by the way. This isn't necessarily the question. This is the answer. So what happens is it sets this out and it says, all right, here you go. These are your solutions. You Jeffrey, you ran 2,150 stocks. You gave us the 48 stocks that your model said that we should now rerun again. You ran them classically again, gave me an answer, and then you ran it on the DWave. So I now have the best answer for 2,150 stocks. I have the best answer in this case for 48 stocks or 80 stocks or 55 stocks. And then I have the best DWave answer. And the DWave answers are different. They tend to be a little larger, a few more stocks. And they're based on true randomness. They're based on quantum mechanics. They're not based on classical mechanics on our Dell server. And you can see the different, like this one has a really beautiful shape. Look at that. That's nice. So this is the target. This is the source. So this is the source. This is how we embed the problem. You see how the stocks are connected to many other stocks. So this is where we start. This is very busy down here. You can see that, right? And this is where we end. And this is the range of answers. So this energy at negative 5.35. So all of these answers are comparable. They are all the same stocks with the same source data. And so this particular layout with 48 stocks gave us a really nice energy answer of negative 5.35. That gets divided and played around with because we've got to normalize it back to our model. But apples to apples, it's comparable across. And so the first one we ran, we got an answer of negative 1.8. And so we had to do some tuning and some fixing, right? And that's what you do on a DWave is you get your problem. We used 4.36% of our subscription, monthly subscription, doing this tuning and this analysis. And then we came in with a better, what we thought was a better answer, right? What we thought was a different, now that embedding has a very different shape. You see that? It's like a sail in the wind. That gave us an answer, positive energy. That was a terrible, horrible answer. So that shape was a very bad shape for our problem. This shape, you see it's nice curve, how it lays out. This one gave us again a negative answer, but not a very strong negative answer. This one, really good answer, negative 4.5. Now, what we do is we have the problem embed one time. That one's better than 5. That one's way better than 5. Oh, yeah. Look at that, 6.8. So you can go back now and you can look at the problem details on how you set it up. It had 55 stocks. It had 20 microseconds. Post-processing turned off, 100 runs. The maximum chain length is 1. And so because it was 55 stocks, every stock could be connected to every other stock without a chain. And so your connections were stronger. I probably could have run that one longer and done even better. So it found a really good answer, right? And so you go through and now, okay, here's another one, 6.0. Negative 4.3, but this was a larger problem set. So you would expect, and this is a terrible answer. No, maybe that's because it's zoomed in. Let's unzoom. There it is. So that's a good answer as well. So when you go from 55 to 80 stocks, you'd expect a better answer. So this is some inside baseball on how we're using the DWave. Again, the D-Wave is based on quantum mechanics. It's based on quantum annealing. It gives a different answer. This is qubits. This is D-Wave stock. We bought D-Wave stock yesterday for $9. We sold it for $11.09. It's trading pre-market $11.33. Now the stock basically just IPO'd yesterday, and so I'm expecting to be able to buy and sell the stock a lot. It's a SPAC, so it came to life at $10, and so we'll see how we do. Maybe we'll meet you out there in the market when we're buying and selling qubits. But just so you know, it's a real thing. There's a real interface. We run real jobs on it. We've been running on DWave for a very long time. I wonder if they still have... They do. I love it. We are still on DWave's website. Look at that. Chicago Quantum has built an equity portfolio optimization application that helps investors and investment managers to select groups of stocks to buy and hold. This application selects groups of stocks out of a universe of 60 liquid U.S. stocks that have expected returns that outweigh the expected variance of returns based on 1 year of historical trading data. Initial results are positive and compelling. And there's a video. And it's true. And we do it, although yesterday we did 80 stocks. That's cool. I like it. We're still out there. I never even saved the page. It's so funny. Oh, by the way, I'm taking college classes for Spanish. For potential clients that speak Espanol. Hablo español un poquito. So there you go. So that was the D-Wave stuff. I just wanted to share that with you. By the way, the market's up this morning. Told you. There's an options trader. I think her name is like Delta Gamma Squeezy Mama Hot Mama Baby. And she's probably like a partner at a hedge fund or partner. She's probably a Goldman Sachs partner. But she was dissing me a little bit because she's like, how did she put it? So I know sometimes I have users or listeners that are under 18, so I can't really curse. So I'm going to try to say it in the nicest way possible. Hey, noob. I think the stock market's going to crash, and it's going to take you with it. Noob. I think that was how she put it. And I think my response was, you could be right, or you could be wrong and possibly rich. And so I don't see the market crashing today. I didn't see it crashing yesterday, and I don't think it's crashing tomorrow. I have some really good clarity on what I look at. And if you ask me a question, maybe I'll actually tell you what I look at. Or maybe I'll just show you anyway, right? Hi there. Thanks for watching. Any questions? So, it's up. I can't believe the spider is up to 412.90. That's crazy talk. That's crazy talk. Okay, so let's dig in. So remember, it's Wednesday, right? CPI number comes out in 7 minutes. What is the CPI number? What is the CPI? What is the Consumer Price Index, Jeffrey? What is it? Bureau of Labor Statistics publishes it. It's a measure of results. It rose 1.3% in June. We're going to see what it does today. It's going to be interesting. So we looked at the world markets yesterday. So what's interesting is tech stocks around the world didn't do so well. Taiwan, basically it's in the toilet. The only thing good in Taiwan right now is the phone company. But all those tech stocks like Taiwan Semiconductor Manufacturing Company, United Microelectronics, ASE Tech Holdings, Hymax Tech, Chipmos Tech. They're all down because Taiwan's an island and it's right next to mainland China, PRC. And PRC has threatened to encircle the island and do an economic boycott or an economic blockade. And all those chips, I don't know that it's worth dying for to blast a hole through the blockade just to sell chips. So I think what's going to happen is those chips are going to get made and they're going to sit in a warehouse. And every month they sit in that warehouse while China tightens the noose around Taiwan. Those chips become worth less. The cars don't get made. The computers don't get made. Thank goodness. We just bought a new laptop yesterday. Not yesterday. We bought it and we got it over the weekend. Monday. We got it Monday. New chips in it. New Intel chipset. And so, good thing we got it because that's why tech is down, right? China doesn't look that great right now. Their auto industry, LI Auto, is down 7%. JD.com is down. So we looked across Europe, and I just find it interesting. Oil and gas, banking, physical commodity mining, cigarettes is up. Novo Nordisk mining again, but a lot of your intellectual property-based companies aren't looking so hot right now. And if you go back to the United States, semiconductors was blood red yesterday. And so for us, semiconductors is that canary in a coal mine. It is the leading indicator of where the economy is going to go. And so the normal way to read this is semiconductors go down, it means the economy's going down, it means we're all in big trouble. I don't read it that way. I read semiconductors are down and semiconductor manufacturing equipment is down and IT is down and IBM is down and HP Enterprise is down and Cisco was down a little and computer makers are down because of the Taiwan blockade potentiality. Tesla's down because Elon Musk sold a bunch of stock, but auto's down. So it's possible that the consumer is exhausted. I'm okay with that. I'm okay with that narrative. Nike's down. Home Depot and Lowe's is down. So home ownership is down. I'm okay with that too. So I'm telling myself a story that says the consumer's exhausted. We have a possible blockade of Taiwan. So tech is down. Consumer's down. Okay. Fine. And that's why credit's down. There's probably worry about credit, right? About people paying their bills. But so I'm not okay, though, with saying that Rome is burning and the whole market's crashing. Because first off, there's plenty of dogs out there that are going down. But there's plenty of dogs that are going up, too. I just don't think it's there yet. And so if we look at major world indices yesterday night, we looked at this last night. We'll look at it this morning. Europe's up. By the way, the VIX is up a little, but not a lot. So when the VIX goes up, VIX is the probability embodied in a price. Oh, there's going to be a fight outside. That's the probability that the market's going to crash. So what happens is when the stock market goes down, the VIX goes up because everyone's late to the game. And everyone's like, oh, the market crashed. It's probably going to keep crashing. Markets take an elevator down, but they take the escalator up. I mean, I've said all these things. They sound really insightful and full of wisdom until you realize it's all a bunch of bromides that don't mean anything. But if you were to take a look at the VIX over a long enough period of time, what you see is, and I'm going to draw a really childish line here. You see that the VIX over time is kind of very comfortable in that range of like 15. Okay, so 15 VIX, the way you do this is you divide it by 19.2 because the VIX was meant to trade continuously, and so there's 19.2. So 15 divided by 19.2 is less than 1% change in the stock market each day. So you're insuring the market so that within 2 standard deviations, or 95%, I think it's 2 standard deviations, 95%, the market's going to go up or down less than 1%, which is not unreasonable. There's 253 trading days. You're telling me that a bull market is going to go up 1% 250 days? I don't think so. That's a 250% return, even if it goes up and down randomly. 1% is a really big move, right? So I got it. You take it up to 20. Here comes childish line number 2. You take it to 20. That's not exactly 20 right there. That's close enough. Nope. All right. So 20 says a 1% move. So that was 0.75%. That's like 1%. Okay. So 38% is a 2% move. Okay. So if it hits that, it's saying that people are worried about a 2% move. That's a real crash. That is an earth-shattering move. Now, there are 2% changes in the market. We've seen them. You see the big candles. But this is protecting against a 2% move, right? This is priced as if a 2% move was possible and even likely. So you don't see the VIX doing that. And right now the VIX is at the lower end of the market. And so people might be expecting a meltdown, a slow and steady fall, but they're not expecting a dynamic crash. So let's look at what else we like to look at. There were some other things I just thought were really interesting, but yeah, we got our asses kicked yesterday in the market. We did. I'm sorry to show that to you, but I might as well show you so that you know what we're doing here. This is not trading based on the model, right? That would be in a separate custodial accounts with Charles Schwab. That's different. So we bought some qubits warrants, and they're up. That's nice. We've got our Corbis. Corbis issued their earnings and their corporate update. It wasn't great news, wasn't terrible news. It was fine. And then you look at Verizon is up 44.77 pre-market. Not a ton. Not a lot, but you know what? You take what you can get. And HNRG or Hallador Energy coal company is flat. Let's see if CPI came out yet. It's supposed to be out a minute ago. There it is. Whoa. Unchanged. CPI is unchanged. All right, so what does that mean? It's not necessarily a good thing, but it's not necessarily a bad thing. I don't know if this is going to make the stock market go up or not. Unchanged in July. So that means there was no change. Inflation's dead. Oh my God, inflation is dead. There's no change. There's no change. How could that be? Energy fell. Oh my God, there's no inflation today. Wow. I don't know if this makes the stock market go up, but this is a really big deal. This is a really big deal. This is a super big deal. Everyone, call your broker. Half of you buy and half of you sell, and half of you will be right. Boom. I'll be right back. Hello, Mr. Spice. Let's get a cat cameo. All right. Tell the people what you think about CPI being unchanged. All right. So this is Pumpkin. Pumpkin Spice. He's a very nice cat. He goes outside in the morning, and he usually likes to come in the house right in the middle of my videos. That's his thing. He's like, I want to be in your video. I want a cat cameo. And so this is really interesting that CPI came in flat. So whole bunch of implications. Let's capture it live because I'm expecting to see things change right now while we're watching. Okay? So first off, China. This was the other thing we saw yesterday, very important. Now, we do not have a paid subscription to Bloomberg or Reuters. But, and I'm not registering because I don't want to know who I am. China's factory gate inflation eased. It's like 2.5%. So China's not seeing inflation. Get rid of that. Productivity was down. Productivity being down is a really bad thing, by the way. Futures are going to skyrocket. They're not yet, but they're going to. Where's my spider? It went from 412 to 418. It's up 1.5% in 5 minutes. The QQQ is up. All right, so the spider must have heard me because it dropped to 417.69. Yeah, this is very bullish for the market, I think. We're wearing a green shirt on purpose today because that is a very nice CPI reading. Very nice. It's going to take the markets up like crazy. And so the VIX, I would expect to see the VIX fall because who's worried about the stock market crashing when inflation's done? We solved it. We won the war. There's no inflation anymore. It's all done. Bye-bye. No inflation. Wrap it up. Now, I know it's not wrap it up, but it's sure fun to say that. There was no inflation last month. None. It was zero. It was zero inflation. What are you even talking about, Jeff? How can there be zero inflation? No, zero. Zero. Prices didn't go up. Go to the grocery store. All the prices are the same. No, it's not quite that true. But, wow. This is like a huge deal. Where'd all my stuff go? I wanted to show you the morning play-by-play action here. We're going to show it to you. All right, we're going to show you on half a screen. We're going to do the quick run-through. First thing again, we love DWave. Just so you know it, we use DWave. We love DWave. DWave, DWave, DWave. It's awesome. And I'm hoping to get a chance to buy the stock again today. We are accredited investment advisors. We are on DWave. We are highlighted on their website. They've referred clients to us, and we've served them as consultants. I like DWave. Market's going up today. Woo! Everyone do a dance. I might dance. I'm going to dance right now because inflation looks good. Let's do it. You guys, you need to save this for posterity. Let's see if I can get a dance move going here. Inflation is zero. 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 All right, here we go. I can't wake my daughter up. So, can I do this? Can I do it? Yeah, I can. Here we go. Oh, there's no inflation today. Woo! Wait all month, no inflation. The Fed doesn't have to raise interest rates as high. Woo woo! It's so exciting. We fixed prices. Oh yeah, energy's looking good. Energy's going down. and we fixed the problem, and grocery store, now it's not going to be so expensive, and everything's great. Yay, yay, markets are going to run, market's going to go up, it's going to be a green day. Oh my God, I can't believe it. Can't believe it. It's going to be very exciting. I'm exhausted from this, right? But so your consumer price index, here's why it happened, right? By the way, it's not necessarily groceries, but that's fine. That's fine, right? What is it? Gasoline fell almost 8% in July. So overall energy is down 4.6% for the month. Natural gas also declined. Food rose, actually. So I hope you guys like the dance. This is interesting because this is what we do. So the food at the grocery store is actually up 1.1% for the month. So, and I notice this too. We grocery shop. We eat at home a lot. We've probably only eaten out maybe once or twice in the past month. We do. So I'm so proud of one of my kids still lives at home with us, and I'm so proud of her. She's such a good kid. And she makes art, and she goes to camps, and she does stuff, and she does Spanish in the summer. She's doing tutoring, and such good. So we took her out. So, but it's expensive to go out. You know, we ended up ordering less food, and it was pretty expensive. The index for all items less food and energy rose 0.3% in July, a smaller increase than April, May, or June. Other things are also down. You look at this, and I can just imagine President Biden taking credit for this. And you know what? He probably should take credit for this. Now, I'm a Republican, and I am a staunch, what they call a hard R Republican. It means I have been a Republican since I was a teenager. I always vote Republican. I vote in every primary Republican all the time. I am a hard R Republican. In fact, it's hard to find somebody who's more Republican than me. And so, even I say President Biden could probably take credit for this. Because the way that you drive down inflation, it's not just the Fed, but there's also is it July or is it June? No, it's July. You buy in the grocery store and cook at home. So, however, food is still more expensive, up 1.1% for the month, especially food you buy in the grocery store. So this is interesting. So market's going to go through the roof. Look at that, 418. The market is going through the roof, okay? So I've got one economically sensitive stock in my portfolio right now, which is Verizon. And so Verizon could go up a few pennies, a few shekels. And if it does, I'm going to make a few bucks. That's going to be nice. That's going to pay for those groceries. So let's take a look at bonds yesterday. So I told you something important yesterday. I told you that the new high, new lows. I talked about that. And so you see yesterday, there were more declines than advances. This is yesterday. No, go the other way. Corporate bonds. And so dark blue is investment grade, yellow is high yield, and like that reddish pink color is convertibles, which is basically another word for equities. Not much convertible traded. Mostly was investment grade. A little bit of high yield. And you can see decliners beat advancers. So fixed income declined again and again and again and again. And so it's not so much that interest rates are rising, because they're really not. It's the risk of companies that have debt is rising. Company risk to pay back their debt is rising. And so I don't want to overstate that, or understate the importance of that, right? So fixed income is declining because of risk more than underlying risk-free interest rates. As an example, the U.S. Treasuries. And you can see how much. Here I like to zoom in for you, so you can see. My loyal viewers, who I appreciate, I want to thank each and every one of you for being out there. If you want to drop a comment in the chat, go ahead. Ask me anything. I would like you to ask me anything. I would definitely... Oh, third quarter slump? Well, that's an interesting question, right? I think... You know what? Let me answer it with data. So let me finish. Let me wrap this thing. So fixed income, 2.5 to 1 decliner. Actually, more like 2.75 to 1 declines. And your new lows to new highs, it's unfortunate, back up about 4.5 to 1 new low to new high ratio. And in the stocks, the new low to new high ratio, 2 to 1 new lows to new highs. So we might be at the end of our really awesome market breadth. So what happens in Q3? So I saw something. I saw U.S. labor productivity. And it was bad. Yeah. I want you to look at this for a minute. We're all woke now. We work from home. We have feelings at work. I don't know about you, but I come to work and it's just me. I used to have employees, or people I worked with, right? Our revenues dropped, so it's just me. So I get to be woke all I want, but the truth is, I think it would be really hard to have employees that want to work from home, that want to work only half a day, that have feelings. I never had feelings when I worked for big companies. You got your butt up at 4:20 in the morning and you got on an airplane. And if you were going to the office, you got to wake up at 5 and you would drive or you would take the train in and you'd go to the office and you'd work your tail off and you'd make friends. You had to have friends and you went drinking afterwards so that you could build relationships. And if inappropriate things were said, you had to look the other way because you had to work with these people. You couldn't constantly run to HR. And sure, there were biases in the workforce. I suffered bias all the time. I remember having to go to a job interview in the basement, and they said to me, "We don't hire your kind here." And I didn't sue them, and I didn't go on Twitter. I tucked my tail between my legs and I said, I'm never going to go and interview with that firm again. I'm going to go somewhere else where they like my kind, right? This is just how we lived. It's just how it was, right? And so we weren't woke. And so now we're all woke. And now nothing's criminal anymore. And now you can smoke pot if you want and everything. And so labor productivity has dropped. And I read somewhere that labor productivity is down a lot. And that's not a good sign. Productivity is the one thing that keeps our economy strong. It's the one thing that makes us special. Productivity on average has been going up 2.2% on an annual basis. And actually, post-war it was 2.8, post-World War II, the Great War. The war to end all wars, right? 2000 to 2007 was a really good time. That was your dot-com boom. The dot-com here and e-commerce and networks and Wi-Fi and wireless to the home. And then we kind of crapped out from 2007 to 2019. And productivity's up again. But look at this. Non-farm business sector productivity output per hour is down 4.6%. Now, manufacturing's up. We know how to make things. But overall, that's awful. And here's the best part. Unit labor costs 10.8% more. So your productivity is down, but your wages are up. This is like tremendously horrible news for our economy. This damns us to poverty in the United States. I bet China's not having the same problems. I mean, maybe they are, right? But I don't care anything. Don't be so woke, right? Go work. Get up early. Go to work early today or tomorrow. If you're a stock market trader, get to your desk an hour earlier and do an hour more due diligence. Run 5 more analyses. Because productivity's down. Productivity's down a lot, and we got to fix that. Because as Americans, the only thing that separates us from the rest of the world is our amazing innovation, our ability to be creative, our ability to learn and grow and think and change and try things and experiment and profit from the fruits of our labor. And so let's be honest, you start raising taxes and you start damning the rich and you start damning a white man, right? And saying that I can't work anymore, right? You know what? At some point, Atlas Shrugged comes to life and we walk away. And now the world is being run by whoever wants to run it and productivity's down 5%. Don't spit in the face of people that have had 40 years of training and work experience and education and all that stuff. Yeah, productivity's down, which means wages are going to fall, right? If wages go up and productivity drops, companies start to lose money. Now, maybe that's what's supposed to happen, right? We're all woke, we're all whatever, and now companies aren't going to make a profit. Do you know that in this new wage bill, this Inflation Reduction Act, they're going to tax companies more? Well, guess what? Companies going to make less. Companies making less right now. I don't mean to rant, but this is a rant, okay? U.S. productivity off the farm is down. We pay more for the employees who produce 5% less. We pay them 10% more. So, no wonder why like ATI physical therapy is down to like $1. Let's see, ATIP, you know, it's a $10 stock. Oh yeah, $1.01 to $1.09 pre-market. Do you know why? That's people going to work and rubbing people and adjusting people. It's physical therapy. It's labor. It's like $75,000 of capital to make a store. And then you run people through it. You run labor. You hope to get, 4 people an hour to come in and get therapy, right? But when productivity is down, that's not so good, right? Okay, so what that tells me is we're in a recession. We're in really big economic trouble, and you see it in fixed income. Companies are not going to be able to pay their bills. Doesn't mean the stock market's going to fall, though. That's the best part of this market. That's why I love the stock market. Because the stock market is trying to look beyond, right? Look at that. You knew it was going to happen, people. Inflation number comes out. It's an attractive inflation number. And all of a sudden, I'm going to simplify my chart for you. I have a lot of lines on my chart, right? So see this line right here? This one right here? we're going to make that line just for, I have kids watching the show. So just for giggles, I'm going to draw this line again, but using a dotted line. This is the bear market rally that we're in. And the bear market rally can continue as long as it breaks 4120. So I said that. See this support line right there? That was 4120. Yesterday it held. It closed above 4120. Today, it's at 4200 now. The S&P 500 is at 4200. I want to say I told you so. I want to tell the whole world, I told you so. There. Ha ha, I win. I knew it. We're not done. We're not done. The market can rally more. It doesn't mean in 2 weeks it's not going to crash, but the VIX is down. The VIX is down. It's going up. Sorry. It's going up again. All those people that are betting against the market are early. They're early. Now, I'm not saying that the economy looks good. The economy looks like crap. Okay? But look at this. Copper, $3.65 a pound. That thing's on its way to $4. Crude oil at $91. It's cheap enough that you could actually afford to put some gas in your car. But natural gas at $7.80 is a concern to me. And gasoline at $3 for 42,000 gallons wholesale, that's also a concern to me. The other thing that I noticed, and I want you to think about this, this is probably the most important thing affecting the stock market, is interest rates. Interest rates. By the way, where is my chat? Did I answer your question, Gregory? So yes, the economy is in the toilet in Q3. Absolute mayhem. Low productivity. Possible tech shortage out of Taiwan. Elections. Taxes being raised. Mayhem. Mayhem. But the stock market can still rise for another week or so. It is summer, you know. And this is a bear market rally. So there's a saying, right? And we're not going to talk about any of that. So I was going to go back to some old stuff that we don't need to talk about. I still have like war wounds. It's awful. All right, fear index is looking better, right? See, CNN is saying we're fine now. We're fine. We're fine. Everything is awesome, right? Look at that. Neutral. Everything is awesome. Oh my God, you don't want to hear me sing. Okay, 30-year Treasury. Yields are down to 2.96%. So probably the most important indicator that I'm watching for a stock market crash is long bond yields rising. I just don't see it yet. Okay? So we're not going to look at... quick look at the COVID. New hospital admissions. United States. You know, I love to look at this. Cases are down. 107.5 is the average. New hospitalizations at 6,100. It's not too bad. Looks like we survived all the summer festivals, at least. So, oh, by the way, I got a fourth booster, or second booster, fourth shot. Oh, yeah. I was sick for 1 day. It's fine. It's fine. I was exhausted, sick, but only for one day. If you haven't gotten your second booster, I would get it just because why not? I don't want to die. I don't want to die. I don't. I mean, I don't want to die. I don't want to die. I'm not going to die. So let's take a look at what Fred says. First up, Jeff, who's Fred? Fred is the St. Louis Federal Reserve. Their thing, their shtick, is that they publish a lot of economic data. And I know this was updated August 4th, and the new data is coming out soon. It'll come out weekly, but I just want to remind you, okay? The Federal Reserve is starting to suck liquidity out of the market. This is total assets. So they are reducing the assets on their books. Now, when they do this, they don't just burn them. They sell them. And they take in money and they neutralize the money. It's not a lot. From the absolute peak, right? 8.962 to 8.874. So less than $100 billion. But that's less than $100 billion neutralized. Okay? We look at MBS and Treasuries, moderately weaker. Fixed interest rate, 30-year fixed interest rate mortgage is 5.35%. We're stabilized. 30-year Treasury bond is yielding 2.974. The 10-year at 2.72. Okay, so what this says to me is long bonds come down. It's very good for the stock market. It's very good for the economy. It's very good for asset prices. However, the one-year Treasury is at 3.1. This is driven more and more by current things, what the Fed's doing. 1 month Treasury is directly driven by the Fed, and you can see 2.118. It's down a little bit. There's people thinking that the Fed may only do, let's say, 0.5% raise or 0.25% raise. Okay, money market rates. Our model is a risk-free rate of 2.5. You can see that you can get 2.2, 2.1, 1.95. These are some big names. CIBC Bank, CIT Bank, Citizens at 1.75, Synchrony, Barclays. So, yeah, you can get good rates. You know, we follow zero hedge. Real wages begin to tumble. So what's interesting is, I don't know that I saw that. I saw wages up 10.8%. Now, the funny part is, I didn't get a 10% raise, and you probably didn't either. So who's getting all that money? Let's go. Let's go. Oh my. All right. Grab your jocks and grab your socks. Bitcoin hit 24,000. Bitcoin hit 24,000. Holy crap, Batman. Holy crap, Batman. This is a phenomenal reading. This is what happens when inflation goes to zero. Bitcoin at 24,000 right now. Wow. Support is 20K. Resistance is 30K. And we are rising again due to zero CPI reading in July. So, Bitcoin shows its colors, which is Bitcoin is about the cost of money. All right, boom, 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 boom. Look at that, look at that, look at that. Market's going to go through the roof. Now, at this point, you need to stop listening to me, and you need to go make a trade. You need to go bet on this crazy, crazy, crazy me get that in there. I'm tweeting these out, and I'm probably going to lose about half my followers right now. But I just don't care. I mean, boom. This market is crazy up. Crazy up. It's crazy. It's crazy up. There's nothing. Look at that. Look at the euro. 103.26. So the US dollar has crashed. The US dollar, now you might be asking yourself, Jeff, why do I care? I'll tell you why you should care. It's a little bit of a complicated answer, but I'm going to make it as simple as I possibly can. But let me tweet this out. I think I'm supposed to call it hot takes. Hot cakes. I know you're supposed to call it hot takes, but I'm making a joke and I'm saying it's hot cakes. So let's talk about it. So let's clear all the drawings out. I'm going to compare this against the US dollar index. I'm trying to remember the US dollar index. US dollar index. I don't remember it. Darn it. Let's take a look. US dollar. There's a bullish. The US dollar bullish. Oh, UUP. That's right. So let's do this. Because you want to know. So if you ever want to track the dollar, you track the UUP. And we're going to make the dollar black so it's nice and easy to see. So when the dollar goes down, now we need to draw a line, I'm sorry. There it is. So when the dollar hit its low, the market was rising. So dollar fell, market rose. Dollar rose, market fell. By the way, our beta, our correlations, our model have been proving this out. It's a 12% correlation. It's actually 12% beta. 12% of the movement. It's not 100%. It's 12%. But it's still a big thing. Okay? When the dollar rises faster, the market falls faster. So if you look at this trend right here, so from here to there. So you can see market accelerates, the dollar accelerates, stocks accelerate down. So I love it. This is another one of those. I should like write this on my website so people could look at it. This is another one of those things, right? That's so interesting. So interest rates. Give me the interest rate. So I guess TLT would be the other one. So let's look at NASDAQ just because I have it and I don't want to mess with all the lines and everything. We're going to clear the drawings. I'm going to clear the drawings, thank you, and we're going to compare it not to the dollar. I already did that. We're going to compare it to TLT. Because I'm TLT. I'm dynamite. TLT. TLT is a 20-year bond fund, basically. And I win the fight. TLT. I'm a pirate. No more singing. Where are we with TLT? So this is Bonds. So when bonds fall, interest rates rise. So when bonds fall, it's interesting because it's not, it took a while. So this one's not as good of a story, right? Because here bonds started falling, which means rates started rising. I don't know that I tell this. This is not as good of a story. Okay, so meh. Let's see what else we got. Anything else to talk about? Maybe we just go right to the videotape here. So let's look at pre-market. Let's look at our own stocks, right? See how we're doing. Oh, looks like Qubits is down. Oh, yeah. Wait a minute. Come on now. Hang on, I saw something. No. Qubits is not down pre-market. What's going on? Somebody spoofed me. Look at this, S&P 418. So the S&P really hasn't moved since we started our video. Once the reading hit, the orders were in. You're kind of too late to be playing games with the S&P 500 right now. What's up with Qubits? QBTS. I don't know. So here's the deal. Where'd it go? I wanted to look at this. So maybe I need to add a symbol. QBTS. Pre-market. Oh, because it's 1176. That's still pretty high. So let's take a look at some of the others. Let's look at regional banks. How are regional banks doing? So they should be up because interest rates are falling. They should be up. Look at Zion. Zion's up 2%. How about our money managers? Oh, yeah. Oh, yeah. The money managers. We got it, baby. We're printing today. Specialty retail and furniture. Now this one's interesting. I don't see the zero inflation reading as helping the consumer right now. I mean, of course, it's going to feel better, but it's not. It's actually, I think the furniture business and the retail business, you're in trouble. I would not be putting money right there right now. Coal's looking strong this morning. Your crypto is going to be up through the roof. Look at that. Pre-market crypto is way higher. But so's your physical mining, right? That's interesting. Physical mining is up, maybe because we're preparing for war. Did I just say that out loud? We're preparing for war with Russia and China. And so we're making lots of stuff. Lots of steel and lots of copper and lots of aluminum. Lots of things we need. That's possible. I wouldn't put it past us. To be honest with you, I prefer the previous president because although, like me, he tweeted a lot and maybe he said things that were silly, I'm also say things that are silly. I danced for you when the CPI came in at 0. But he made friends. He was not a killer. He was not a war hawk. And to be honest, when you've seen war, you don't want to see it again. It's not nice. It's not helpful. I don't want to see it. So we have a president now that insulted Russia right away. And we have a Speaker of the House that insulted China right away. And now the president is insulting China again by having war maneuvers a joint operation training exercise at the line of actual control between India and China, and we're going to put troops in Kashmir this week, I think, or next week. You don't think China is pissed off? Sure they are. And so your mining stocks are up because you're sure going to need a lot of iron ore and a lot of metal, steel, if you're going to fight the Chinese. One aircraft carrier is what, about 8,000 people, 6,000 people, and it's thousands and thousands. It's probably 1 million tons to make with all the stuff. So semiconductors are up today. That's interesting. It's because semiconductors are a high beta, economically sensitive area. So funny. Yeah, DWave stock is down this pre-market, but it's up because it was a $10 stock. It's up 24% a day. What do you expect? People like to take a profit, make a profit. So I guess we're going to go right back to the S&P 500 and say, dollar down, stocks are up. Full stop. Interest rates. It's not as direct a correlation. But my feeling is interest rates go down, stocks go up. What's interesting is the 30 years higher. The 30 years higher. And look at the 10 years starting to recover a little bit. That's something to keep your eyes on. Right? So the 30 year, these are all like rules of thumb, right? So when the 30 year goes up, long-term investments become more expensive. When the 10 year goes up, it means mortgages and things that you and I might invest in. Longer term investments go up. Houses, real estate, that cost goes up. Let's take one last look at the futures, and then we're going to sign off. Oh my God, I could talk all day. I feel like actually leaving the live stream on and talking all day. So bonds are stronger, which means long duration investments are going to be up today. And I mean, look at that. It could break 145, 146 if we're not careful here. Markets are looking good. Look at that. The S&P 500, 4,200. Do you know we called 4,432 at the top before? And now we're actually reapproaching it. And markets climb a wall of worry. Markets climb an escalator. But they take an elevator down. But look at the VIX. No one's worried. No one's worried right now. No one's worried. So this is interesting. Commercial hedgers are long the VIX. Large traders are short the VIX. And small traders kind of right in the middle. So it's interesting to see this, right? If you have to be in the market, you're hedging. Commercial hedgers are hedging. And they're hedging more now because it's cheaper to hedge. So that could be a thought for you and me, which is, when do you hedge the S&P 500? Do you hedge it when it's down? Or do you hedge it when it's up? That's like a stop loss. Why not put in a stop loss at 4,200? It's cheaper now than it was a month ago. I'll leave you with that thought. A lot of thoughts here. I could probably write a blog post for like an hour. I've got to write up my research on the DWave for now. Everything's an hour today. But we'll just have to see how it goes. We're very excited today. Market is up. Market is up. We're going to do a little jig. We're going to use a light. And we're going to do a little, woo, market's up today. Woo, I was right. Smack that ass. Market's going up today. Woo, woo, woo. It's a very exciting time. And hopefully you're not short today. Because I think if you're short today, short people got no reason to live. This market's going way higher today. because of a zero inflation reading. And good luck today. Hopefully you enjoyed the fun, the excitement. And if you like the video, we're not paid to make these videos. And we don't advertise the videos. So we get like 10 views maybe in a day, right? You can help us by hitting the subscribe button because that tells YouTube that you like the video. It also helps you because you get notifications. We're not always on at exactly the same time. And so you get notifications. You can decide whether to watch live or you can watch it later. We try to make the titles a little bit meaningful. And you get notified. And what happens is YouTube sees the subscribers go up and it decides to promote the video or recommend the video to others who might like it. So that's why we want you to subscribe. It helps. We don't make any money on the videos. We're just doing it to be there for you. So thank you very much for watching. Bye-bye.